I'm Doug Bailey. I'm a reporter at InsuranceNewsNet here, and joining me today is the president of the National Association of Insurance Commissioners, Jon Godfread, and he's also the insurance commissioner of North Dakota. And there's nothing going on really in insurance to talk about at this time. But actually, I wanted to start out like that. Has there been a more dynamic time in your field, and is this the job you bargained for?
No, so I've been in this role for 8 years, and I'll tell you, when I first started, it was all about healthcare, right? With the implementation of the ACA and the impacts there. That really hasn't gone away. I think with the passage of the congressional budget and some of the impacts there, the one thing we didn't necessarily have to worry about was the property market. And over the last couple of years, that property market has become very, very active. And so, is it a job I bargained for? I mean, yes. I mean, the one thing I love about this job is it's something different every day, and insurance touches every part of the economy. So it is a fascinating job that is, a pretty fairly well kept secret across the country, I think, and we're working to change that. But it is an absolutely busy time, which is it's a fascinating time to be in insurance for sure.
What do you see? I mean, I had the TV on here and there's bad weather again moving across the country, but what is the priority for you as you look across various states right now? And what's the top priority for you?
So I think the biggest thing that we're working on right now is resiliency, right? Having the resiliency discussion around a number of states and around across our country. We've been having that discussion for probably the last decade at the NAIC. It's gaining a lot of steam right now. But
And what
I
do you
think
mean by that, resilience? Just define it for me.
so home hardening, community resiliency, wildfire mitigation, just any kind of flood mitigation, really those mitigation efforts. I think it's gaining a lot of steam, and what the insurance industry is really, really good at is rating risk. We're really good at identifying risk and where the risky areas are. The one thing that I think we're struggling at is connecting those dots with local communities to say you need to take mitigation efforts or efforts that need to be taken to incentivize or to enhance that coverage that's available. Florida's a great example. Florida has after Hurricane Andrew, they went to a fortified home system, and that takes a long time to implement across the state. Buildings don't come up overnight, and so as you change building codes or fortify your inventory, that takes some time. But they're paying the dividends for that now. You saw the last hurricane season has been, not nothing, but I think for the most part they've been able to kind of put up the hurricane walls, put up the flood walls, and weather those storms a lot better than they did, say, back in the early or the late 90s. And so having those discussions in places like North Dakota, where we don't have catastrophic hurricanes or even some of those catastrophic wildfires, we really need to bring that discussion to those communities as well and say we need to take these steps now before with the catastrophe. And so I think you're seeing that go across the country. I think you're seeing a number of states kind of engage in those discussions. The Alabama home hardening systems has
Yeah.
caught on across the country. Oklahoma, Minnesota, Louisiana, they're all taking a look at it. And so it's those type of discussions that we're having across.
Is it the role of the regulators to take a stronger role in enforcing tougher building codes or
So
limiting
we don't have that
development in
authority,
high?
right? We don't have that authority. It's our job, I
Right.
think, to make that connection, to talk with the realtors, talk with the builders, talk with the local community, the local government bodies, and say, hey, as you look at, is your community insurable and can your citizens afford insurance? Here are some steps you need to take to ensure that. Insurance is a private industry, right? I mean, there's no law in the country that says an insurance company shall write a certain risk,
Right.
right? And so there has to be some work on all parties to incentivize that coverage, right? I mean, there's an investment made by the insurance industry to cover your risk. If you're not mitigating that risk, there's a lack of an incentive to make that investment.
What plans or what can you do if companies continue to pull out of wildfire areas or coastal areas? Or what?
Well, I think we're seeing some correction in that space, right? California has done a lot of work on their California Safer Homes and their programs there to try to, again, bring some reasonable mitigation into the communities to say, okay, if the community takes these certain steps where they got defensible space, they're doing community-wide mitigation. You're seeing the insurance industry respond by writing in those areas. I mean, you think of Paradise Paradise in California that had that massive wildfire a number of years ago. They're still able to find insurance because when they rebuilt that community, they built those defensible spaces. They mitigated that area, and so insurance is still being written in those areas. It is a little more expensive, certainly, and I think that the affordability crunch is an issue. But I'm hopeful again, as long as we continue down this mitigation path, that should start to adjust and correct itself as we can see, as we can weather some of these catastrophes a little bit better.
You mentioned like regulators don't have the authority to enforce building codes. But is there authority that more regulators need that they don't have?
I don't want to get in the business of building code enforcement. I don't think that's a role for the insurance regulators across the country. I mean, we're here to build healthy markets and hopefully have affordable markets that are competitive. But I think again, we're there to connect the dots between the other parties. So we're for the first time ever, I think we're talking with realtors, we're talking with builders, we're talking with some of those local decision makers. So a lot of those building code discussions happen at the local level, your county, your city level. And so really, if I've had more conversations with county superintendents and county supervisors and local government bodies than I probably ever have. And I think that's an important connection to really understand when you make these decisions on building codes or modernizing your structures, what does that mean? Because the reality is a lot of these local governments are staffed and are populated by realtors, contractors, and home builders, right? And so when you look at changing these codes, that means likely it's going to cost more for that builder to build that home, which home values is certainly a concern, right? You don't want to make homes unaffordable. But I think we're also getting to the point where the cost of insurance is also impacting that value of that home. And we need to have that real discussion about what steps communities can take to ensure that their citizens can afford to own a home and insure that home.
In my profession, we, and not only mine, but we look at what's going on with the property casualty insurance, and we call it a crisis. Given the climate risk, the private insurance, is private insurance model fundamentally sustainable, or
Yeah,
how do you
I
see it?
think it is. I think you're seeing capacity being built in the reinsurance markets. I mean, we were just out in Pasadena 2 weeks ago as a NAIC regulatory body, right? We had, I think, 30 some odd states were represented in Pasadena to meet with the global reinsurance industry to talk about capacity, talk about, okay, what steps are you taking and is this viable, and how can we help, and what can we do to provide access to these coverages? And I think you're seeing some capacity being built in those spaces because I think adjustments have been made. I think of North Dakota's property market. Again, when I came on board 8 years ago, it was a pretty sleepy market, right? I mean, the rates were what the rates were, and we just kind of continued on.
Yeah.
I think it's getting a lot more granular now. You're looking at the risk a lot more intensely. And so as we rate for those risks and adjust for those risks, that market has corrected. So I think we're at a point now where capacity is being built. Claims are still being paid. You look at the LA fires and the Pasadena and Altadena fires, something like $40 billion have been paid out by the insurance industry. So that market is functioning. It's working. I think where we're hoping to make some more gains on is, again, that community resiliency discussion. How do we mitigate in the future? And if we're going to continue to build in these high risk areas, what do we need to do to ensure that we can at least protect those properties?
But you talk about it as though that you can only recommend solutions, you can't drive solutions. Is that frustrating, or is that just the way it is?
Yeah, I mean, I think it is frustrating, right? I mean, I had the conversation here in North Dakota about building codes, and it's a political third rail. I mean, anytime you start talking about building codes, it's a challenge, especially in a state like we're in the geographical center of North America, right? I mean, we're a rural state. And we haven't had a derecho, we haven't had a tornado, at least the last legislative session. We've now had them this summer, but we haven't had some of those catastrophes that have really spurred that movement. And so when you go in front of the policymakers and say, hey, I want to talk about how do we modernize and upgrade our building codes across our state, and they go, for what?
Yeah.
And again, it's about how do we be proactive and have that conversation before the catastrophe. The reality is, unfortunately, in a lot of these policymaking areas, a catastrophe needs to happen. You saw that response from Hurricane Andrew in Florida. You're seeing it in response from the California wildfires, the Colorado wildfires. You're seeing those responses after the fact. I think one of the values of the NAIC is having a collective body to come together where insurance commissioners can go back to their policymakers and say, hey, we've got a canary in the coal mine here. Let's make some changes while we still can to prevent those losses on the front end. That's becoming a challenge, and that will continue to be a challenge. But I still don't think we'll ever get the authority to do building code regulation, and I'm not sure we want that.
Well, you won't have to wait too long for another catastrophe. It seems like
Fortunately, yeah.
and they're occurring at unexpected places. We had tornadoes in Vermont last year. I mean, in places, and then there were hurricanes or tornadoes in Southern California in places that never expected to have those kind of things. So how do you plan
Yeah.
for that?
I mean, you don't, right? I mean, and we had some derecho force winds blow through North Dakota. We've had a couple tornadoes and we've had a very active storm season this summer. And again, that's in my 8 years, this is the most active storm season we've had. And again, thankfully, a lot of it has happened in rural areas, but if it still hits your community, it's still hitting your community, right? And there's still issues there. And so again, we know how to protect against wind and hail. We know how to build to these threats. We've got to have the political courage and the will to do that. And I'm hopeful that as our conversations continue, we can have programs like the Alabama Strengthen Alabama Homes, all these other different kind of grant programs that incentivize that action will hopefully help consumers and legislators and policymakers and communities take the steps that are needed to protect their properties.
Are the state-backed, the FAIR plans, are they financially sustainable long term, or is?
I mean, it varies state by state, right? I mean, we don't have a fair plan in North Dakota, but a number of states certainly do, and I think it varies state to state, and I think they're a necessary portion of that insurance market, right? I mean, it's the insurer of last resort for a reason. But I'll call on Louisiana, who has taken a significant step forward in, modern upgrading the roofs in those systems, right? And so by going into and addressing the fair plan homes and providing grants to modernize those roofs, a lot of those homes have come off the fair plan. So you provide a relatively modest grant of state dollars on the front end to remove that risk from state books. It's been a very, very successful program. And so I think you're going to see those type of programs continue across the country. But again, I think, and especially in catastrophe prone areas, they are a necessary tool to provide that coverage of last resort for the citizenry.
What about at the federal level? Is there a need for a federal reinsurance backstop, or?
I don't think so. I mean, I think I'd call on the National Flood Insurance Program as kind of an example. And I have some challenges with the National Flood Insurance Program. I don't think they're financially sustainable.
Yeah, that's right.
And so I think, we've got 150 plus years of state-based insurance regulation to fall back on. And I think it's, we've certainly weathered our storms. There's been a significant, you look back over the last 150 years, there's been a number of challenges that we've weathered. And so I think we're in the middle of a challenging time. But I think, again, the markets are still working. The industry is responding. And I think, again, the one thing that this really highlights for me is the need for everybody to come together and really take a strong look at their risk profile from the community level to the personal level. And I think consumers are more in tune with their risk now than ever. And I think that's a good thing, right? And so we can actually adequately rate and understand that risk and then take the necessary steps to protect it.
You mentioned Florida and mitigation steps taken there. Which ones are proven to be most effective? And
yeah, I think when Florida moved to the fortified homes, I think you can see some significant. The data behind that is significant.
how did that work? What exactly was instituted?
So they moved to, in hurricane prone areas, that you have to build to a fortified standard if you rebuild, right? And the University of Alabama just released a 10-year study on their Strengthen Alabama Homes, which really looked at roofing in the Alabama kind of the Gulf Shores area. And there is a significant amount of data on if there was a fortified roof in that area, the losses were dramatically less, right? Given the hurricanes of the last decade. And so we now have that data behind it saying that, okay, if you took these mitigation steps, the losses were less. And so we can bring that to the industry and say, okay, this community decided to modernize their building codes, they should get a discount on that rate, or they should actually go into the rating material. And so we're now getting the data behind that, which should help, again, stabilize the marketplace.
What's the priority for regulators? Is it to keep insurance profitable? I mean, or keep it affordable, which is
we've got a dual role, right? I mean, we regulate the companies for solvency, right? If a company goes insolvent, they don't have the money to pay the claims that come in. But we also, our consumer protection is our first and foremost. And so it's a balancing act. being an insurance commissioner is a lot more fun when the rates are stable and the rates are going down. But we review, there are, I think, 12 to 15 states that have prior rate approval. So they look at the rates before they're offered into the industry, into the marketplace. North Dakota is one of those. So we go through with a fine tooth comb to make sure that the rates are fair and adequate. Again, making sure that they can maintain the solvency that they need to have, but also not being excessive. And so it's a dual role, and that's why we have actuaries on staff. That's why we have a number of support team. But I would say it's both, right? I mean, you can't have insurance if you don't have a company that's solvent. But if you price the consumers out of the market, you don't have insurance. And so we're trying to thread that needle, which is at times difficult.
Can regulators require companies to offer premium discounts to homeowners,
Yeah,
or is it?
and we've seen that in some states, right? Minnesota is requiring some premium discounts if they've taken certain mitigation steps. Again, I'd always prefer that that's backed up by data, and there's some data analytics behind it, because again, when you start artificially messing with rates, you end up affecting the availability of that coverage. And so that's a very delicate situation, but you're seeing some of that, especially in states that have made an investment into those strengthen XYZ homes, strengthen Oklahoma homes, strengthen Alabama homes, that there is some expectation that if the state's going to put dollars into a grant program to fortify a home, that then there should be a corresponding discount. Again, the hope is that that'll be backed up with data over the long term, and that discount is justified. So some states are doing it that way. Other states are waiting for the data to come in and allowing the companies to make that adjustment on their own.
Now, what contingency plans exist if insurers continue to pull out of areas, or what do you do about it?
Again, I think you look at California as one of the prime examples of some of the steps that they've taken, and a lot of that wasn't necessarily due to decisions made by the insurance regulator or the insurance regulatory community. You look at Prop 103 and some of the other decisions that have been made in California going back 20, 30 years, where they weren't able to pass along the cost of reinsurance to the consumer. They've kind of froze home values. Some of these pieces have a dramatic impact on the ability to write insurance in those areas. I'll give Commissioner Lara a bunch of credit. He's gone back and made some really hard decisions and kind of unwinding some regulations. And so I don't think, talking and speaking with Commissioner Lara, he is not as concerned about the availability portion in California anymore, because they've taken some of those steps to incentivize the companies to come back and write in those areas. It's how do you find that affordability sweet spot for consumers to be able to afford that insurance?
What else is on your plate? I mean, we're talking mostly P&C and catastrophe insurance. What else is
One of my big priorities this year as president of the NAIC is really looking at that capital generation in the insurance industry. And so we are financial regulators at our core, and so we monitor the capital that companies bring into their books, and how do they manage that capital. And I think we're very different than our European colleagues or our international colleagues. They're very bank centric, and so very focused on short-term liquidity. We have a little bit of we have a little bit of a longer tail. We're able to govern a little bit differently, and how do you highlight and make that differentiation? Because again, the more capital you can bring into the market, that should hopefully bring some downward pressure on those rates and make those affordability and availability options a little bit better for the industry. So we've spent a lot of time working on one of our financial regulatory tools, our risk-based capital system, RBC, and really trying to modernize and provide some governance principles around how changes come to that system. In my opinion, it's a premier financial regulatory tool in the world, and it's been around for 40 plus years, and we're now getting to the point where we're going to modernize it and hopefully provide some adaptations to it, which will incentivize hopefully some more capital into the industry, which is good for not only the insurance industry, but also the U.S. economy as a whole. And so outside of all the catastrophe things that are going on, you've got things that are going on in Congress and the new administration. We're also taking a hard look at our financial regulatory tools to make sure that we're keeping up with the times, so that the industry can remain competitive as it possibly can be.
What about auto rates? We hear that the tariffs are going to affect auto rates big time.
Yeah, I mean, we've been in a challenging time with auto rates for a while. I mean, you go back to the pandemic when you had supply chain issues, you have inflationary pressures. It is a challenging time in that space, and so now you've also got these cars that
yeah,
my family got into an accident. It wasn't our fault, but you ding a bumper and all of a sudden it's $3,000.
That's right.
And so with all the technology that's going into the cars, if the thing that you're insuring is inherently more expensive, your insurance will be more expensive. And so
Right.
balancing that is becoming a challenge. And then you've got the auto body shops who've got, it takes an awful lot of technology to, even replace a windshield these days with all the sensors that are in it. And so it's a challenge, certainly. And I think you're seeing the industry respond with some technology and trying to do, you look at, if I can plug in and monitor your driving and monitor those pieces, I can give you a discount. Well, that creates a whole privacy issue then.
Yes.
Do I want that as a consumer? It's a complete balancing act. I'm of the opinion, I'm a technology guy. I can't wait for autonomous vehicles. I can't
Right.
wait to sell my cars and get rid of them. But we're certainly not there yet. But it's an absolute challenging time, and I don't think the tariffs will help that situation. I mean, again, as you look at auto parts and replacement and repair,
Mhm.
anything that drives that cost up will inherently drive that insurance up.
I can't let you go without hitting on this topic, but is the state commissioner, the state regulating system, are they equipped to handle the industry as a whole now? That's a global market. It's most of the big companies have, big operations in Europe and Asia and so forth. Can state regulators handle that?
Yeah, I absolutely think we can. I mean, we've got over 11,000 regulators across the country that wake up every day monitoring and regulating the insurance industry. I would challenge that if the federal government were to step into the space, you would not have 11,000 employees within a federal government entity to do that. And again, I think you look at, so we recently took over securities in the state of North Dakota, and that is a primarily federally regulated system. And again, it's a challenge, right? I mean, the big guys receive a lot of attention, but we're trying to prevent the issues on the front end, on the early stages, right? And so I think having it spread out across the states, you've got, each state and territory have an insurance commissioner, have a consumer protection point where a consumer can reach out to and have that discussion. It also allows for the flexibility, right? The risks in North Dakota are inherently different than Florida and California. And so my legislature have the ability to adapt to the risks that are central to us. Makes a lot of sense versus a kind of a one size fits all method and model. And so I think absolutely we are equipped. I think we've, again, shown it over the last 150 years of pretty solid state-based regulation. There's a reason, I think, why the United States has the world's largest global insurance marketplace. We represent over 40% of the world's insurance. And I think if you broke off California, they'd be number 3 in the world.
Right.
And so I think we are absolutely equipped with the tools. And again, I'll not to rag on this to anybody, but the primary areas where we get a lot of number of complaints are on health insurance and flood insurance. And those are the 2 areas where the federal government has really inserted itself into oversight and regulation. It's not to say we don't have challenges, not to say we don't have issues, but I think we've got a system that's flexible enough to adapt to that and to work through that. And I think you're seeing that with our response to, not only the climate resiliency discussions, the property issues that we're seeing now. And again, a big credit to that goes to the NAIC as a member body that we can all come together. We meet 6-7 times a year as a membership to talk through these issues. And so I don't think you can duplicate that on a federal level, and I don't think you'd want to. I think the cost that would be inherently cumbersome, and then you'd lose a lot of that flexibility that has really been, I think, valuable.
I mean, correct me if I'm wrong, but I think the NAIC originally supported the idea of a federal office of insurance, but now no longer, and is supporting efforts to
I don't
go
know if they
away
ever
with it.
I don't know if they ever supported they may have before my time under the when the first initial rounds of Dodd-Frank.
Right.
I think again, we maybe didn't know what we didn't know at that point. And now that the federal insurance office has been implemented, it's an office that's looking for a mission, right? And so my challenge with the federal insurance office primarily has been some of our interactions internationally. You have a federal insurance office who holds itself out as an insurance regulator, and they don't regulate anything. And at times can get crosswise with the state-based system in terms of what we should be doing on a global stage. That is a really big challenge for us, especially when we talk globally. And then also you look at some of the issues around, data gathering and other pieces. We kind of got into a little bit of a discussion around the PCMI data call, the property and casualty market intelligence. We as state regulators have the access to that data, and we have the ability to bring that data forward. And we were working in partnership with FIO to, get what they needed. They ended up releasing a report with half-baked data essentially. And we told them that was like, hey, you don't have the complete set of data. And it's like, well, we're going to release it anyway. That to me doesn't really feel like a partnership.
Yeah.
And so I think there's some challenges there. And I think I'm a firm believer in the state system. I think it'd be best left to the state. That doesn't mean Treasury wouldn't be overseeing the financial markets and they have all the tools to be able to do that. It's just a challenge when you have a federal insurance office with really not much to do. They're going to probably find some problems too, or find something to make a problem, and then that becomes a problem for everybody.
Well, get rid of it or find a better way to integrate it?
I'd love to get rid of it. I think an alternative for that would be to, if you wanted to make it almost like a chamber of commerce, and that's probably a bad analogy, but where they can go out and talk about the U.S. system and try to incentivize capital development and deployment into the United States system, I think would be a fair alternative. But that's not the role that we've seen FIO take on over the last decade. They've been trying to insert themselves as a federal regulator over a system that they don't have any authority over. And so again, it makes for confusion, especially on the international stage.
Well, John, there's a lot we could talk about now, but thanks for joining us today.
Yeah, anytime, Doug. I appreciate it.
This is really good stuff.